Ladies and gentlemen, we decided to go live slightly early. Let's mix it up. Hopefully everyone is doing well. Okay. It is the midday market madness today. SOFI down another 3.8%, getting sold off with the rest of this private credit concerns. Stock is under an additional, or stock is under $18 a share. Okay. Down an additional 68 cents. However, does this end up opening a door for Anthony Noto to go buying again? What do you guys think is the chances? Let's put a poll in chat. What are the chances that we see a purchase from SOFI's CEO today? Last time it was under 18 and he had the capabilities to buy, he did. Okay. Now, maybe they're starting to look at acquisitions or something. However, it was only like a week or so ago. We missed the start again. What? What do you mean missed the start? It opened the door for me to buy? Yeah. No, I mean, true. Our buys matter as well, but I'm really interested in seeing Anthony Noto's purchase if possible. Will SOFI CEO purchase stock today? Let's see. Be honest. Obviously, the answer that we want is yes. But do you guys feel it in your heart of hearts? What do you guys think is going to happen? We're under $18 a share. Last time he bought. I bought 100 shares. I just bought. It doesn't matter for the stock price. It doesn't matter in the terms of, okay, let's imagine he puts down 500 grand or another $1 million or something. It's not going to move the needle, but every single investor in the world, okay, institutions that see, like, if there is a private credit concern, who knows more about whether or not SOFI is going to make it out of that crisis than the CEO himself? Okay. We see the securitizations of their loans. We see the reports on a quarterly basis. What we don't see is the actual live data. Anthony Noto does. He's not going to come out and say, well, I'm trading because the forward metrics that are I'm staring at look great. But he's going to say, hey, I believe in this company long term. But he's not going to do that if there's going to be some massive bust in the company, right? So that $1 million purchase, although that's not a huge amount of money for him, is still a lot of money, right? He'll buy below 15. Who knows? No, he's not going to sell. He's not selling. Definitely not going to sell, but to purchase, maybe. Also, tonight, ladies and gentlemen, we have earnings, okay? Rubrik, Sentinel One, Adobe, Alta Beauty, Lennar Homes, Service Titan. There's a bunch of very interesting companies that are showing off earnings. I might be live. This one seems a little bit more exciting. A lot of very interesting names. I just honestly don't know which earnings to listen to, Rubrik or Adobe. I think both of them are going to be very interesting. I wish that they weren't on the exact same time. I would actually listen to both and will listen to both tonight. But yeah, let's see. He'll buy below 10. Well, I believe he'll buy below 10 as well. It's just, are we going to get there? Rubrik, Adobe. Okay, you guys said he is not going to purchase, 61%. Let's end that. And then we're also going to see what stock. Let's pull that really quick because that's going to give me some insight into what to do later on. What earnings to listen to tonight? We will put Rubrik earnings and Adobe earnings. By the way, guys, let's take a look at the overall market here for a second. I ended up hiring someone. They're coming on earlier than April 1st. So it's official. Their first day is going to be the 23rd of March. Their name is Marshall. He's a really good dude. And hopefully you guys will be able to meet Marshall soon. He'll be the first new member of the Future Investing team. So please welcome him whenever he joins. That's going to be super freaking cool. But yeah. SOFI is in a really great buy zone right now for long-term investors. I agree, but there's a lot of really cool companies in great buy zones right here as well. Here's another one I want to show you. Okay. There was this story. Where did I put it? Oh, of course. So I sort all my articles by the different topics that I want to talk about, and then I never end up following the topics that I want to talk about. But Cursor is reportedly in talks to raise at a $50 billion valuation. Any developer, any coder already knows what Cursor is, but if you guys don't know, this is one of those AI tools that helps with coding but in better context, using multiple models, so then you can actually end up coding in multiple web pages and kind of hold all that context together. It's a great service. The annual recurring revenue has grown to over $2 billion from essentially being at like 200 million, a few months ago. Like, it's just skyrocketed in growth. Now, the reason why Cursor gets better and better is because Claude's getting better, Codex is getting better, and they end up utilizing a lot of those new models, right? However, Cursor's not the only AI tool and coding agent that people are using to help create apps. And there's names in public markets that you can get access to without being an accredited investor, without having those strong relationships in, venture capital, and actually potentially get a better valuation. The name I'm obviously talking about here is Wix.com. Wix.com is allowing you to get access to a smaller version of Cursor. We're not doing $2 billion of ARR. They're doing essentially 100 million today and potentially hundreds of millions by the end of the year. Growing fast, putting out products what seems like every single day. They just released their super agent models. But what you end up getting is an extremely fast coding agent, an app developer, Base 44. On top of that, you're getting a traditional business that also has, a free cash flow positive business, hundreds of millions of dollars of revenue per quarter, like very, very sizable business that is actually funding the growth of Base 44 rather than having to go to public market or go to outside capital to continue to dilute investors. In fact, they actually want to do the opposite of diluting investors. They want to buy back $2 billion worth of stock in this $5 billion company. So after 2 years, if nothing else changes, this is a $3 billion company that you're getting access to a extremely fast growing AI tool similar to the likes of a Lovable or a Cursor that's looking to raise at a $50 billion round. That's crazy. A $50 billion post-money valuation, and you can get a smaller version of it, different, less on the coding side, more on the user-friendly side that's putting out new products all the time, at $5 billion. And they're buying back stock like crazy. That's pretty interesting. That is very interesting. Now, we've had better prices to purchase this stock at. It was recently at $60 a share not too long ago. But, people always want to wait for the bottom. And then whenever the bottom passes them, then they go, oh, well, I missed my chance. It's like, well, if we believe that this company is going to continue to grow, maybe the goal is not $90. Maybe the goal is $250, $300 eventually if we're long-term investing, right? Okay. I can't take anyone who invests in Adobe seriously. Well, I think it's a difference in strategy, right? some people are very good at finding deep value. And, I don't think Adobe is sort of that cigar approach, but like maybe the sum of parts of that entire business is worth way more than what investors are giving it credit for. But due to this sort of SaaS apocalypse, if you want to call it that, they might be getting overly beat up. My favorite strategy for investing is just picking names that I think are just going to continue to grow, and the companies are not appreciating as fast as what I think that their fundamentals are doing. I think Amazon's in that camp. I think Google is officially back in that camp again, sitting at $300. It has appreciated a lot, but now we're looking at, every aspect of their business is accelerating growth, and the company has sort of flatlined over the last little bit. If we end up looking at, the Mag 7, aside from Microsoft, okay, aside from Microsoft might be in this trend now, but they've just recently sold off, and now they're hanging out in this sort of $400 area. But Nvidia has been at the same prices since July of 2025. You look at Amazon being in the same sort of range, if not slightly lower, since practically May. Google, not as long, November. Tesla for a while now, Apple for a while, Meta has been here for a while now. Recent sell-off actually happening in October. Some people look at this and they say, oh, well, Nvidia's been at the same price. I'm sick of holding, like this was clearly bad timing, yada, yada, yada. So I'm going to sell now. It's like, but this time, while fundamentals continue to improve, while the partnerships improve, while they make more and more deals, is compressing that spring. Okay, so the worst valuation that Nvidia could possibly be at was probably somewhere along the lines of July or August of 2025, whenever the run up had happened from the last big raise, better than expected results after DeepSeek. And then we ended up getting to this point. But the longer that it stays at this point, but margins are improving, growth is improving, more customers are coming on, and the belief in artificial intelligence, the idea that this is a bubble, has become less and less true. This has actually allowed Nvidia to be at a better valuation today than it has been essentially since DeepSeek almost. We're talking about a 37 times PE ratio on a trailing PE ratio for the fastest growing company, not just in the Mag 7, but probably one of the fastest companies in like the NASDAQ 100. Probably, like if I had to venture a bet, there's probably few names on that list that are growing faster, right? And not just on a trailing 12-month basis, but I mean on the last quarter basis, because they keep accelerating earnings. So, there's a high chance that by Q2 Q2 of their version of Q2 of 2027, which is 2 quarters from now, they'll be growing at 100% year-over-year rates. I like that. I really like that. I really like that. Shout out to, what's his name? Garth Brooks. Okay. Okay, let's see here. Financial stocks are in their worst 3-month stretch since COVID. Yeah, that's crazy. Blah, 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 blah. You don't have to believe me. I'm just, this is the way that I view it. The war can't end sooner. I'm not sure. I'm not sure when it will. But those are things that are completely out of my control. I can only position my portfolio. I think a lot of times people, what they end up doing is like they'll end up looking at a company like Amazon back in like the 2000s, right? And they'll be like, oh, well, since it ended up spiking up back in 1999, if you had bought at $5 and 65 cents, you would not have reached that price since then till late 2009. And they're like, this is why it's terrible to end up buying in tech at the wrong time, because you could end up paying for a premium that they no longer see for 8 years. It's like, dude, if you're holding, if you even top ticked this company and you held on to it for 9-10 years without lowering your average, that's your fault. Like, if you like this company here, you should love it at 41 cents. There's so much time to end up lowering your average, and then people make it out to be like you could never have made money for 10 years in Amazon. It's like, you absolutely could. If the company's fundamentals are improving and you're getting better pricing, buy it. So for me, the strategy holds true. I like Amazon here. Obviously, it's getting cheaper. Does it mean that companies have to trade at 30 times PEs if we end up going into a recession and things get much worse? No, they can trade in teens PEs, and like the entire market can come down. And then the areas where we are used to trading at, we might not end up seeing. But overall, if you can lower your average, that's going to be great in every scenario of the markets, right? Even when valuations are depressed, and waiting for the future time whenever valuations start to get aggressive again, you ended up buying in the last dip. That's going to look, extremely fruitful going forward. If you want every single share to be bottom ticked, it's like you're hoping for a Hail Mary. That's extremely hard to do. I'm not even trying to do that. But yeah. Clark Kemp is mad in chat because I made fun of, I didn't make fun of, I just said that I don't believe Elon's timelines. So he's extremely upset, but that's all right. We're not looking to underperform the markets over decades. In fact, people constantly bring that up about individual names that they stare at for 6 months, and then they end up accelerating, like Robinhood, whenever it went from $20 down to 14 in August 4th, and people are like, wow, congratulations, goodbye. And now we're sitting at $80 after being at 150, and they, even from 150 down to 80, people are like, making fun of that. It's like, guys, the original purchase was in the teens. 80 feels like nothing. Like even the drawdown from the highs, if you had held through, we're in a completely different price range. If you had purchased whenever we originally got excited on that name, you're laughing. What's the difference between a 5X and a 10X? I mean, yeah, it's huge, but it's a 5X. So stay calm in markets. It's a long journey. Long journey. All right. SOFI under 18 still. Yeah, I saw that. Triple Q's under 600 as well. Let's check crude oil as well. I wanted to see that. We are at 95.20 per barrel right now, up 9%. Happens. I try not to make my war reliant, and honestly, I like that. That's not even shade towards like there are war companies, and then there's companies like Palantir. I think Palantir is actually not war reliant. They benefit off of these types of situations, but like their commercial business is growing faster than their government business. They're doing so unbelievably well. They benefit in the short term from these Iran conflicts, but they'll persist way after it as well. It's just expensive. Okay, I wanted to show you guys Perplexity CEO. He was just on CNBC. He's talking about a lot of very interesting things, the commoditization of models, how they differentiate, the new products that are coming out, why we're going to need more GPUs. Let's go ahead and have a listen.
Perplexity hosting its inaugural Developer Day, rolling out more than a dozen new products. And joining us right now in an exclusive interview is Perplexity's co-founder and CEO, Arvind Srinivas. Good morning to you. A whole bunch of new products, including some that have come out prior to yesterday, but others as well. Help us understand sort of where Perplexity is going and what Perplexity is doing differently for example, then how we should think about it relative to some of the large language models that you rely on underneath the service.
Great to be back here, Andrew. So Perplexity, since the launch of computer, we like to say everything is computer. We introduced Perplexity Computer, which is a massive multi-model orchestration system. And just by virtue of that word, the difference arises from all the model providers. A computer is not just one model. In 2026, or towards the late 2025, models started specializing rather than commoditizing. Anthropic is very good at coding. OpenAI's models are very good at writing. Google's models are very good at multimodal. So when you are at a computer, and if you just want to emulate whatever you do as a human being on a computer, whatever digital task, if you want to give AI access to exactly the same set of tools, file systems, and sandboxes, you need all models to be able to do the entire work, which is where Perplexity shines, because our focus from the beginning has always been on accuracy and orchestration. We want to be the orchestra conductor across all these different models.
Arvind, I've tried to explain to people what computer is. For those who have not used, it's one of those things where if you use it, you can feel it and understand it. Much harder to describe. I've told people, it's a little bit like OpenClaw without some of the security bugs and things like that. But then they say, well, what does that mean? Can you sort of just explain it in the simplest way you can?
Sure. Think about you, Andrew. When you open your computer to do your work, what are all the things that are actually needed? Ignore all the AI models out there. You need a browser. You need access to the internet. You need a file system. You need to keep, there needs to be a place where you store all your files. And you need a way for programs to run, your shell or your terminal. You may not have to even look at it, but there are programs running in the background. If you put these three things together, you have a computer ready to go. This is actually the idea behind some of the things like Chromebook, which try to put just these three essential things inside a computer. Now, if you want an AI to do all the work you as a human being do on a computer, but except it's running securely in some server in the cloud, if you put these three things together and pair them with LLM models, which do the orchestration, you essentially get a digital worker on the cloud that's running securely on a sandbox with all access to your personal data and persistent storage. That is essentially what computer is. And you brought in OpenClaw. The main difference, as you said, is security. It's all running on the server side securely, does not go override your files, does not import malware from a skills hub somewhere on the internet, does not have, you don't give it full access to all your messages if you don't want to. So all that controls security, and the fact that Perplexity has its own common browser, so we can do agentic browsing on your behalf on the server side. These are the major differences from existing like hobby projects like OpenClaw.
Here's the thing that I can't understand. Long term, look, OpenClaw is going to OpenAI. I'm imagining everybody's going to create their own version of something that looks like computer.
Yeah.
Now, I recognize that you're going to be able to orchestrate it using multiple LLMs, and each LLM will only be doing it using their own. But at some point, aren't all these LLMs, large language models, effectively going to converge and become somewhat commoditized?
That's exactly what is not happening. That's what we thought was happening in 2025, early on. But towards the end of 2025, what happened was models started specializing. I'm just quoting Dario here, like in one of his most recent interviews, he said this, where even within coding, which you think might be a specialization, OpenAI's Codex models and Anthropic's Claude models are very different in terms of what they're good at in coding itself. And this is one particular skill. Writing is another skill. Being good at images and videos is another skill. What we are seeing, at least, is that enterprise users are always selecting multiple different models all the time. And that's actually one of the value propositions of the Perplexity product, that you don't have to feel locked into one model provider. You don't have to have one horse in the race. You can hope that Perplexity figures out which model is best for what purpose. and you just have to come to the product and use it, and you can trust Perplexity to care what we need to do for each model.
Let me ask you a separate question. As you know, Amazon has been trying to block your Comet.
We'll listen to that potentially after if you guys want, but he just talked about why they're going to win or why he thinks they're going to win the case with Amazon. But I love that part that he talked about the sort of commoditization of models. And he goes, no, actually, they're going to be super specialized because we're already seeing that now. Like you're seeing that from ChatGPT and from Grok and from Claude and Gemini, depending on which one is better at deep research, coding, parts of coding, images, video, all of them. If you guys use across a lot of these services, you know which ones are good for what. Like Grok's really good for, deep research and this sort of stuff because it's access to information on X is great. And then Gemini's really good at images and video, and Claude's really good at coding. ChatGPT Codex is very good at different styles of coding. It's interesting for a name like Perplexity or for Base 44 or for any of these other ones where they get to pick across the broad stream of all different models. Now, for people that asked what computer is, and he kind of answered it, but he also kind of didn't. It's just a service that they have on their website. You can do personal computer as well, which would allow you to sort of use a Mac Mini or something like this to run it locally. But you can just tap into the cloud and essentially ask it to create anything that you want it to create. It's actually mind-blowing. And I tried to get this across to people yesterday where I'm saying, like, this is what they just showed off the other day. They showed off how they're creating almost family office-like reports and dashboards via a couple of prompts. Okay, prompts that me and you would be able to do. Like me and the simpletons in chat, not the actual coders and the smart people in chat. I'm not talking to you, Parsival. You could do this with no agent. But, for the layman like me, this is where Perplexity helps. Take a look at this.
It decided to name it the Jeff Terminal. There are lots of other products that let you see the basics of your portfolio's movement, but Computer goes in depth, helping you understand why the movement is happening. So it joined my portfolio data with real-time market data and prices and contextualized it against overall market movement, in this case, comparing to the S&P 500.
Now, I get it right now. You guys don't, some of you don't want your portfolios benchmarked against the S&P 500. Let's wait for better days to do that. But, for people that have complex margin strategies, complex option strategies, wheel strategies, all of these things. And you might even be paying for apps right now in order to help facilitate some of that stuff. You could do this with a couple of prompts tied in with Plaid. So none of this is manual entry. Plaid is end up taking your financial information and filling this information with your data. Okay. And this same tool, by the way, that created that dashboard is the same tool that helps me create a website tracker, a jobs posting tracker, really anything. It's the same tool. It's super cool. Currently required. No, actually, Perplexity Computer, as of yesterday, it launched for Pro. The token use is way less. I think it's only like 4,000 tokens. But it is for Pro users as well. They launched Computer for Pro users. Hola, amigo. What's up, Dookie? How you doing? Staying calm in these crazy markets? Or are we freaking out? Firefly Aerospace up 19%. Crazy. There's not a lot of green in the markets, but on the green that you can find, we're seeing some pretty explosive movements here. Like 8Co Holdings being up 17%. Citrus LEU, Citrus Energy up 7.6%. The VIX, by the way, up 7%. I think fear and greed is an extreme fear right now. Not by a ton, like we're not back down to 4 or something like this, but I think we're at, let's take a look. We're at 24 right now. Still not great. Okay. Not where we want to be. But this is a market that we're all sharing here. I feel the pain. I promise. I panic bought SOFI. That's the type of panicking I like. Okay. SoFi's down 4.5% now. Really? I think a lot of it is some of this private market concerns. There was a video. Let me see if I can find that as well. There were some people talking about this, along with another video that I want to end up watching regarding the Anthropic news, which is going to be very important for Nvidia investors. Where did I put that news story? Let's go have a look about the growing concerns in private markets. Quick video here.
Private credit firms sinking this morning on some headlines that Morgan Stanley, Cliffwater limiting redemptions for their funds. This following BlackRock doing the same last week, and as investors now worry about the quality of some private credit loans. Let's bring in Chris Katowski, senior analyst at Oppenheimer, try to make some sense, Chris, of this flurry of headlines. It's good to have you.
Good morning.
Does this feel to you like a situation in which geopolitical and energy shocks create a dash for cash? And if you're a little bit illiquid as an instrument, you're vulnerable?
Well, let's put it this way. The limitations on liquidity of these instruments are a feature, not a bug. They are meant to create a total return over time by two mechanisms. Mechanism number one is that they let you invest in illiquid loans that earn a liquidity premium, an illiquidity premium over time. And number two, they prevent you from having to liquidate at the bottom, right? Which is the problem with ETFs and high yield funds.
Right.
So you should know that these instruments are meant to be, or these instruments invest in assets that are meant to be held to maturity. And that's why you have the limitations on liquidity.
Where do you think the locus of the storm is?
Well, the private credit as an asset class has had a fabulous history over the last 20 years or 25 years. Preqin puts the average return around 10% a year. And even like the lower quartile of private credit funds in the worst vintage year had about a 4% return. So, it's had a great history of generating good returns. And nobody is suggesting that retirees should go plow all their money into, illiquid BDCs and this. But is there a good spot? Does it make sense to own that? Because there are risks in the public markets as well. Like for example, 40% of the S&P 500 is invested in 10 stocks. Or if you take a look at the aggregate 10-year bond return, it's been about 2% a year. Even with the declines in the BDCs, they've returned 3 or 4 times that much money over the last 10 years. So again, you should have an allocation to these things, but it shouldn't be your entire portfolio.
And then the swath of people in the chat that are like, well, he's not talking about SOFI. That's why we're raising up our fee-based revenue. Fee-based revenue is not hit by these types of concerns. And that's why, they were catching a premium, because if anything does happen in risk markets and, credit deteriorates and there's potential losses there, then you're going to want to make sure that there's more money coming in from, credit card fees and this sort of thing than, other way around, like more loans that could end up bankrupting the company. But we'll have to see. Let's see the market really quickly. Apple down 2.2%. Meta is also down 2.2%. These are some pretty massive sell-offs on, nearly for Apple, $4 trillion company down 2.2%. Nvidia holding up decently well. I think just because of the amount of news that continues to come out here for Nvidia. Anthropic has been continuously just pushing out more and more updates, which is allowing the use cases for Anthropic to be more and more useful. Obviously, there is the concern that the Pentagon keeps fighting with them, and they might have broken some rules in terms of asking if and when the models are being used by the Department of War. So that's why it could essentially be a supply chain risk. Overall, though, I'm trying to look past a lot of the concerns, and I think people get caught up in the, this is not old, this is not over, this is just the start, this is World War III, this is going to last multiple years, sell everything, gain cash, all that stuff, and trying to focus on what I, the stocks that I can end up putting more and more money into that I believe will outgrow concerns that people are having, and I think that is Nvidia, right? But to each his own. Rivian just posted, by the way, really quick. Let's see where Rivian is today. That the R2 is releasing, so you can pick yourself up an R2, I guess. R2 has arrived. A new Rivian design inspired by adventures of all kinds, reserved now. Deliveries begin later this spring. They released that 2 hours ago. Let's have a look at this thing. Oop, I think it plays music, if I'm not mistaken. Right here. Yeah, okay, I can't play it. But, yeah. Are you guys looking to get a Rivian R2? Sticking with the Tesla Model Y, or all gas all day? What are you thinking out of those three options? I asked my girlfriend because I thought that the like you can even see here they promote it to well, this would be a great car for ladies as well. And I asked my girlfriend, I was like, do you like the look of this car? And she's like, no, I hate it. And I was like, okay, well, we don't have to get it. She absolutely hates it. Model Y Juniper for me. I'm seeing them everywhere. I feel like I'm seeing more of the refreshed Model Ys than I see of the regular Model Ys. And I'm in Canada. Simp? Oh, okay. Yeah. Sit back in your single chair with no girlfriend around you and then be like, this guy freaking, listens to his girlfriend? Pussy. Like, all right. You're in a healthy relationship. I'll take the advice from you. Let's go ahead and actually hear from the Defense Undersecretary about the Anthropic supply chain risks here.
Our next guest is at the epicenter of the Pentagon's feud with Anthropic. Joining us right now is Emil Michael. He is Department of Defense Undersecretary of Research and Engineering, and he heads up the Pentagon's adoption of AI. He also led discussions with Anthropic and its CEO, Dario Amodei, on the use of the company's AI models. And first of all, Undersecretary Michael, thank you for being with us today.
Good to see you, Becky.
Good to see you, too. Let's walk back and try and figure out what happened. We've spent an awful lot of time talking about the government's battle with Anthropic and kind of the fallout from it. But if I understand correctly, I think what first happened was a holy cow moment, I'll say, that you had. I think you called it something slightly different, but a moment after the Venezuelan raids that captured Maduro, where Anthropic went and asked Palantir if its software had been used in those attacks. And you said at the time that that was your whoa moment. What happened?
Yeah, what happened is we're in the middle of negotiations with all the frontier lab companies to more widely deploy their models across the department for all the various use cases, enterprise, intelligence, warfighting. And then after the Maduro raid, one of the senior executives from Anthropic had called Palantir, who's the prime contractor, and Anthropic's a subcontractor in a contract with the Department of War, and asked if their software was used, which is classified information, and implying that if they didn't like the way it was used in that raid, that we might have a problem and have violated the terms of the contract, which meant that they could shut us off at any time, which was the whoa moment, because then we realized we are dependent on this one provider who wants to insert their policy preferences in the middle of an operation potentially and harm the warfighter. And that was something that we took extremely seriously at the time.
Did Palantir answer the question that was asked? Was their software used?
Yeah, I can't say. It's not okay for me to say here. Yeah, it's still classified. But the mere asking of the question and then the mere relaying of that question to other executives at the company who have since commented that they were asking different kinds of questions and they didn't have clearances really posed a big problem. But really the substance of problems there was that they were worried about their software being used in a raid. And remember, they've sold their product into what's called a combatant command that engages in combat. And their terms of service, trying to restrict how that combat is conducted. And that means they're inserting themselves in the chain of command. And that was very worrisome to us at the Pentagon.
Okay, let's walk through what we on the outside have kind of heard and how it's been reported and how we understand it. The sticking point came down to 2 points in the negotiations that you were leading with Anthropic. And that was, first of all, they didn't want their software to ever be used for spying in mass levels on Americans, whether it was legal or not. And second of all, they didn't want decisions being made without a human involved when it came to destruction and weapons that could kill people. Is that the case?
No, it's sort of a red herring. When we got the contract that we inherited from the Biden administration, there were 25 pages of different restrictions on the Department of War and its use cases. And they were so restrictive when I looked at them that we started a negotiation to sort of reset the baseline. I mean, we are the Department of War. We use their software and services and hardware for Department of War activities. And we wanted to baseline where we were at. And so at the end of it, we actually got to terms on the autonomous question because we have our own policies at the DOW which say that there has to be human oversight on autonomous weapons, and there has to be human oversight on the development of autonomous weapons, which you might use physics, material science, aerodynamics, all those kinds of things. But throughout the negotiation, we had to negotiate every single exception to their broad use policy, and that became untenable in a department of 3 million people. The mass surveillance thing was just a marketing ploy, really. The Department of War has no equities in that kind of thing. We follow the law. We actually agreed to put in the contract that we follow the 1947 National Security Act, the FISA Act, and all other applicable laws. They were trying to redefine their own definition of what domestic surveillance meant and take that power away from Congress and our democratically elected leadership.
Emil, let me ask what happened with OpenAI, because you were negotiating with OpenAI at the same time. And from the outside, it looks like OpenAI received basically the same considerations that Anthropic had been asking for on those 2 points. Is that the case? Why did you strike a deal with OpenAI and not Anthropic?
There was a few points here. So we told every frontier model company that every lab gets the same terms. Because we're the government, we have to be fair. And frankly, we wanted all 4 labs to have their products available to our warfighters. And so the contracts that we wrote are very similar in what they provide, and different types of language got people more comfortable than others. So there was really no big difference between the two. Remember, at the Department of War, we have 2 types of agencies. We have the combatant commands and the Department of War, where the civilians work. We also have intelligence agencies, and we're knocking them down one by one. So OpenAI got the same terms on combatant commands, got the same terms on the rest of the Department of War, and we were just trying to finish up the intelligence agencies there. So another obfuscation that Anthropic put into the media space for some reason.
Let's cut it there for a sec. I want to take a look. You guys were talking about Blue Owl in the chat, and I hadn't taken a look at the stock in a while. Obviously, I was aware of its sell-off because of the private market concerns, but I didn't know it got that bad. Down 41%, or even 44% in the last 3 months. That's crazy. 41.8% year to date. And, if you just move it forward even 2 days, so like from January 7th down to today, down 44%. Crazy, crazy, crazy. Time to buy. I don't follow Blue Owl, aside from their, recent deal with Upstart and SOFI. I don't think that I'm the type of person to buy names, not thematically, because I will buy names thematically, but purely based on these types of concerns, to then go ahead and pick a name that I don't know about their financials. If you can't name the CEO of the company, if you have no idea what their financials look like, I mean, I would stay away from those types of names. That's just pretty clear strategy, unless you want to throw together some sort of due diligence over the next week. Maybe you can catch it even lower than it is today. Market cap 13.6 billion right now. Do people not understand falling knives? I understand that things that are falling can keep falling. Your recent comment about that all financials are falling knives and that there's no way to make money in bank stocks, like, okay, this will not be the last time that bank stocks go up. They will see their light again. So I don't necessarily agree with that, but if everyone knew what a falling knife looked like through and through, it'd be a lot easier to spot, but they are pretty hard to spot overall. We are screwed, aren't we, Tanner? Screwed in the short term. Hopefully making better markets in the long term. Can't vibe code a bank charter. I agree with you, but it does look way easier to get a bank charter now than ever. I remember this old comment that Anthony Noto made. This was back in the Biden era. And he said that we're probably going to be the last company to get a bank charter in the next decade. And there's been another company, Palmer Luckey's bank, ended up getting a nationally chartered bank license. Nubank will get a conditional approval. There's been a bunch of companies like BitGo and Circle and all these ones that are looking to get different styles of bank charters, but it is obviously a much better regulatory environment to enter the banking space. But whenever you're talking about, overall, what are the moats that will continue to be in place even after full artificial intelligence and everything like this? It will be regulatory. Like, I think hardware is going to be another one, but regulatory capture, these sort of things, banks will always be banks. You can't vibe code a bank charter, but they are easier to get in this administration. Did you say that Palmer Luckey has a bank? Yes, I can't pronounce it. It's someone put it in chat. Erebor, something like that. He was banking with Silicon Valley Bank, and then they went under, and then he couldn't find another bank that ended up suiting his needs. Erebor. Yeah. I wasn't too far off then. Erebor. Like the Lord of the Rings? I bet. I mean, he's a super nerd. But yeah, I think it is also a Peter Thiel company. That's funny. If that's the second Peter Thiel company with a Lord of the Rings name, that's very interesting. Lonely Mountain Bank. Sometimes you got to throw on Misty Mountains from The Hobbit whenever you're sitting around, you're doing some research alone, you listen to that Hobbit theme song. I get down to it. I'm not banking with Erebor, but we all like Lord of the Rings from time to time. You guys didn't think I was caught up on the Misty Mountains Cove? Think again, okay? I'm not just the Harry Potter guy. Catch me in all made up universes. All right. Google, as of yesterday, ended up finishing their acquisition of Wiz. And then the next day, they announced a partnership with Accenture to expand Google Cloud security partnerships. Wiz is such a fast-growing company, okay? Incredibly fast. It'll be very exciting to see how many new partnerships that they are actually now going to start posting on Google's platforms. Be like, and we're working with this company, and now we're working with this company. It'll be really exciting for the company to keep up, sentiment through the quarters. Sherlock Holmes. I get down with some Sherlock Holmes, but more the Robert Downey Jr. Ones, not the black and white old school Sherlock Holmes. Game of Thrones, I'm all about. Yeah. Are you part of the Marvel Cinematic Universe? Absolutely. I catch it all, guys. You don't understand. I actually watched a movie yesterday, Gangs of New York, with Leonardo DiCaprio. Haven't seen it before. I thought it was this goofy ass movie based on the trailer or whatever, like seeing the gangs line up and they all look freaky weird with Liam Neeson there in the front. Didn't want to watch it. Ended up watching it. Loved it. Mwah. Okay. Daniel Day-Lewis is the man in that movie. He's the best. He makes that movie. I think he's better than Leonardo DiCaprio in that movie. Didn't it win Best Picture? I don't know. This is an old movie. It was barely alive back then. Isn't it a 2002 film? I didn't watch it in cinema. I was watching like Bluey or something. I don't know. Okay. By the way, Bluey didn't exist. I was just trying to make it funny. So, speaking of the winners of artificial intelligence, we need to look to the cloud names. This is really interesting. So obviously, I'm sure all you guys have seen this chart before. This is the three major hyperscaler names: Google, Amazon, Azure, or Microsoft, I should say, and the growth rates over time. Massive spike up in Google, but holding strong for the other ones as well. There's a lot of belief that Amazon will be able to hold up this 30+% growth rates going forward, potentially even breaking into the 40% going forward. Remember, this is growth rate, not total dollar amount. This is an acceleration of growth rate. Then what we end up seeing is Google is potentially going to, for the full year of 2026, break above 50+% growth. Very, very excited. You'd like There Will Be Blood? I haven't seen it. So, yeah, multiple people saying There Will Be Blood. I got to check out. All right. All right. Da Butcher. Dude, I love this. I can name any topic or anything, and there'll be some form of people in chat that will share those interests with me. It might alienate some people that are like, I've never seen this Gangs of New York movie, but I very much enjoyed it. Tevis in chat, what's up, brother? Are you allowed to say where you are right now? Can I say it? Dude's hanging out in libraries, editing videos. Tevis got very upset at me whenever we went to New York because I was going to all the major, places in Manhattan that were very beautiful, but I'm not one for architecture. Like, Tevis is looking around. He's like, dude, look how tall these ceilings are. I'm like, yeah, they made it very tall. And I'm like, it probably took them a long time. Like, I get it. Like, I understand. But he wants me to be like mind blown. I'm like, I've seen this before. This is going to age me so much. You guys are going to hate this. This is going to make me feel like an iPad kid. And I apologize. But I'm just telling you guys the truth. Whenever I see things, Tevis, where did we go? It was the Grand Central Station. He goes, man, you have to see this. I walk in and I was like, it looks exactly the same as it does on Google. I was like, it looks the exact same. And he goes, but like, you remember that quote from what Robin Williams in Good Will Hunting, where he says, like, you haven't smelt the actual thing. You need to experience it in real life. And we walk into Grand Central Station, all it smelt like was feces. It was awful. And I kept clowning on him. I was like, wow, I appreciate you bringing me here to, there's like a pile of homeless poop where we walked in. And it was awful, dude. Okay, he said, why would I travel anywhere? I could see it online. Tanner put this up. Wild statements. Watch Good Will Hunting. Dude, I did see it. I just stated that. But you might be behind in the live stream. It's not that I said that. It's that I agree with experiences. I want to go on an experience, something I can feel. But whenever they're like, oh, let's go look at the Grand Canyon, I'm like, I know what it looks like. It's a hole in the ground. The earth cracked. Okay, water ran through. I get it. That's the most iPad kid thing I've said all year. I'm sure I'll fix myself up for you guys. I apologize. I'm aware it's a bad take, like fully aware. -2s, I get it. Dude, it's totally different in person. That's what he said about the cathedral and the Grand Central Station and all these other places. He's like, dude, look at that ceiling. Like, that probably took like 100 years to carve. And I was like, I bet it did. Okay. Like, did you see that Claude just put out a new model? I agree. 100% agree. My people right there. Tanner, do you still own Nubank? Yes. Yes. Okay, well, I haven't actually been at the Grand Canyon, so I don't know. Maybe it is different. But all the ones that people tell me it's going to be different, and then I go and experience it, I'm like, this is That ain't it, Chief. You have to appreciate the pyramid. That's another one I wouldn't go to. Like, you're not allowed in, you're not allowed going on it. You're not like, you walk over and see triangles. I'm like, I've seen it. Is it at way bigger scale than I ever would have imagined? Yes, but then I also read how tall it is. Pyramids are probably the worst experience, full of scammers. Okay, well, then there's that too. I'm going to a cemetery today. Must see. You'd hate it. Dude, I would hate it. I'd absolutely hate it. And Tevis, dude, I love your passion for it. Like, honestly, I wish I loved the way that you love. I'm sure it's a beautiful thing. I'm sure your heart feels very warm whenever you go to that cemetery today. But I'd rather stare at candles. Just a different type of candle. Ladies and gentlemen, the stock market's down 1.3%. I bet Tanner can't dance. No offense. Dude, I can't dance. Me and my girlfriend have had like fights at weddings of like, she's like, come on, come dance with me. And I'm like, please don't be the person to pull me out of my chair right now. Please don't do this. Tanner, what's your top 10 long-term list for stocks? I mean, it would probably change, but the top 10 would be the top 10 things that I'm holding right now. What's the point of dancing? I agree. I completely agree. Anyone that says it makes them feel great, I have no clue what you're talking about. It makes me feel hot and sweaty. I don't want to do it. If I wanted to get hot and sweaty, I'd go to a gym and then I'd feel like I've improved myself. And then there's like I like the feeling of going to the gym or runner's high or something like this if I'm going to get all sweaty. But then I go and dance and everyone's like, ha, we're having fun. And I'm like, dude. And I don't even think they look weird. I think that I look weird. I think they're doing fine. What's the point of sex? Let's not go too far, okay? I'm not that crazy. Dude, I love music. I love music. It makes me feel good inside. I love music. I love stand-up comedy. I love movies. There's a lot of art that I like. But it sure as heck is not dancing. It sure as heck is not going and looking at art. A museum or an art gallery might be the worst ideas of my entire life. But I love the people that love them. I wish I could share in that. Dancing gets you laid more. I've been in a relationship for 8 years. The laying is over with. Okay. Now we just do it to procreate. No, I'm kidding. I'm kidding. I'm kidding. I have a beautiful wife and we have a lovely relationship. Not wife, girlfriend, but might as well be my wife. But I'm no longer looking to seduce. Okay. Favorite stand-up I honestly couldn't tell you. I'd have so many. Right now, I'm a huge fan of Shane Gillis. But I'm honestly a super fan of 100 different comedians. Tanner, what size tampon do you use? It's very funny. Dave Attell is a crazy call out. That's a comedian's comedian. He's great. Is Melly a buy right now? Patrice O'Neill is amazing too. Mike Birbiglia. But I can honestly listen to Patrice O'Neill and then go right to Mike Birbiglia. I like them both. Completely different styles. But yeah. Is Melly a buy right now? I'm not purchasing Melly. I hold Melly. Wow, this has gotten so sold off. That's crazy. 1,600. But once again, I am trying to remain extremely disciplined on the companies that I'm buying. And I think that artificial intelligence is the greatest thing that I could possibly invest in right now, still to this day. So I'm buying Mag 7 names. I'm buying the cloud names. I continue to hold. And if I could find a deal so low on Nvidia, I would buy it, but it's roughly approaching that 50% mark in my portfolio, so I just can't continue to acquire it. Do you prefer clean comedy? I wouldn't say I prefer it. I think I'm fine with whatever. I'm not an easily offended person, so I think by the people that I've named, like the Patrice O'Neills and the Shane Gillises, those people can kind of push the thing. I saw an Anthony Jeselnik comment here. But like, I don't seek out that type of like shock humor. I don't really care for Anthony that much, but he's still good. Like I've seen all his specials. I listen to all comedy. I love it. And then you would think somehow I would be funny, but I'm not. it's not something. It must be a gene. It's not something that you can learn. It's just I listen to it all and I've learned nothing. Yeah. Okay. Thanks for the BM&R video yesterday. Keep them coming. So I said this earlier today, but I officially did hire on. Well, I sent an offer of employment and they accepted. So their first day is going to be March 23rd. His name is Marshall. Hopefully they'll be, I'll be able to introduce you guys to him. I've known Marshall a long time. There were some amazing people that reached out, and please, like, if I continue to grow the team, I might reach out to some people when I need additional help. But I needed someone that was a little bit more local, that could help with a wide range of things, and that's where we are right now. But yeah, March 23rd will be his first day on the team. Pretty exciting. Hire a joke writer? No. If you didn't have Hood nor Nebius and you could pick one, which one would you buy? I mean, in this current market, I would pick Nebius. But luckily, I don't have to pick. So I am still a shareholder of Robinhood, but I'm not even looking to add right now. Buy more SOFI or new at these levels? I honestly am very, very comfortable with SOFI. I obviously love new. I think they'll be a long-term compounder, but honestly, you guys always force me into, hey, pick one. It's like, I don't have to. That's diversifying some of that risk, because if SOFI does end up getting hit with a sort of a larger credit crunch, then maybe Nubank will survive that. And if Nubank continues to, face pressures just because it's a Brazilian company, and currency conversion and all of these things, like FX changes, then SoFi will outperform it. But I can kind of just buy both, and they're in the exact same theme. They're both beating my expectations. They're both in the exact same theme of taking away from the large institutions and going towards these customer-friendly financial institutions. And because they don't have branches, and because they don't, essentially have a lot of the same payments, like the buybacks and the dividends and all of these things, they can be extremely aggressive on the way that they, give more to customers while still remaining extremely profitable. Yes, Robinhood's monthly metrics are coming after the close. It is true. Yes. Okay. You know what? Let's take a look at this really quickly as well. Once again, look at the share of overall, generative AI, or, some of these model companies, and which ones people are using. Look at the share of how much Gemini has been growing. Now at 24%, up from 21%. Now, the industry as a whole, right now, this is looking at a chart like, breaking down the 100%, but overall, every one of these companies is growing over time. Just which ones are growing the fastest. Claude, you can see on a consumer side, has been growing the last couple of months, really starting to take shape here. But Gemini also, massive changes. Huge growth, all at, the expense of names like ChatGPT. Google is killing it. Look how diminished DeepSeek is. Yeah, DeepSeek. Wow. They were probably 9% before. Now it looks to be like, 2-3%. Well, I'm not using them. And I use a lot of them. I use Perplexity. I use Base 44. I use Gemini. I use Grok. I'm not really using too much ChatGPT right now, but that's just because I like Gemini. But yeah. Who uses Copilot? I'm still wondering that. I have no clue. I think the people who are using Copilot have no, they honestly just don't care. They don't care about the market. They probably think Copilot's the only company doing it. They're like, wow, Microsoft's been making some strides. Okay. Let's see. DeepSeek had its DeepSeek moment with Gemini. You're not hard enough on Copilot. I haven't used it in a bit. You're insane for not using Claude. I'm not I have no reason to use any of the coding services or anything like that. So in terms of, me making images, helping with, any of my YouTube questions or anything along my work, which everything is embedded in, Google services, I just assume that Gemini will do much better with the tying into my Google services like Google Drive, Gmail, all of that stuff. Yeah. Okay, ladies and gentlemen, that is it from me. Hopefully you guys are doing well. Teva says Tanner. But until next time, really do appreciate it. Bye for now.